In this video, we are going to talk about Coinbase Analysis. So before starting this video, please like this video, and subscribe to our channel for the future updates. Anyone who wants to buy Bitcoin, Ethereum, Litecoin, or other numerous cryptocurrencies on the market can hardly avoid one of the established crypto exchanges. Coinbase, one of the most popular crypto trading platforms, is now venturing onto the big trading floor. The initial public offering, IPO, i.e., the first issue of Coinbase shares, is to take place on the 14th of April 2021. The company only filed its S-1 filing with the United States Securities and Exchange Commission, SEC, on the 25th of February. But what can investors expect from the Coinbase IPO? Is it worth investing in today, or what is a realistic expected return? We have looked at the company's history, the business model, the current market development, and the management and evaluated the share from today's perspective. To find out now whether Coinbase is a sensible investment for you as an investor. Let's start. Coinbase's development in recent years. In the first major part of our company evaluation, we want to look at the historical development of Coinbase. From the historic growth of a company, conclusions can regularly be drawn about the behavior of the founders of the management. First of all, we would like to point out that Coinbase has been around since 2012. Bitcoin was the first cryptocurrency to emerge in 2009. Accordingly, Coinbase is not a company that has only recently jumped on the crypto hype and now wants to use the good market phase to collect money from investors. However, the company is probably also consciously using the current market phase to issue its own shares at a good issue price. This is a sensible move from a business perspective. But first, let's review some of the most significant events of the last few years. Coinbase Foundation in 2012. Coinbase was established in 2012, and its history can be traced back to that year. The business was founded by Brian Armstrong and Fred Ehrsam as part of the Y Combinator, a startup incubator. With Coinbase, Y Combinator has already created other startups such as Reddit and Airbnb. Then there was one more thing to look forward to. Armstrong was still working as an Airbnb developer at the time, while Ehrsam was employed as a currency trader at Goldman Sachs. After raising $5 million in venture capital from angel investor Fred Wilson in May 2013, the company was set to raise another round of funding in December 2013. Wilson's VC Union Square, the VC Andreessen Horowitz, and Ribbit Capital all made new investments there. Coinbase had already raised $31 million in venture capital by the end of the year. Fundamental valuation of Coinbase. Investors who believe Coinbase is merely a fad should reconsider their position. This is because the company's platform caters to three distinct consumer groups. Retail customers are those that use Coinbase's basic features. Private investors who purchase, keep, sell, lend, or stake cryptocurrencies are among them. Hedge funds, asset managers, financial managers, and businesses are among the institutional consumers. These users gain access to a sophisticated trading network with advanced storage capabilities through Coinbase. Coinbase is also one of the most liquid trading platforms available. Coinbase's ecosystem partners offer developers, traders, and issuers access to services that make participating in the ecosystem simple and straightforward. This increases the participation of this important customer community. However, knowing which consumer groups the business caters to is insufficient. Rather, it is based on an assessment of the target customer community. This is where the organization excels at persuasion. Coinbase has increased its user base by 20 million users in the last 3 years, which is remarkable. This translates to an increase of about 87% over the time frame under consideration. At first glance, this can seem sluggish in comparison to other startups. The balance sheet data, on the other hand, paints a different picture, as Coinbase is already profitable. It also demonstrates that Coinbase users are very involved on the site. Despite an increasing number of users in the crypto market, Coinbase is profiting at an above-average rate and rapidly increasing its market share, according to the company's market share. Coinbase is expected to account for about 11.1% of overall market capitalization in 2020. The Coinbase balance figures in the analysis. However, it's even more interesting to pair the company's strong fundamentals with the main figures, and this is where Coinbase, in my opinion, can really shine. Coinbase's income was $533 million as recently as 2019. These are impressive numbers for a business that was only formed in 2012. Nonetheless, the bottom line of this $500 million was just a net profit, or rather, a loss, of $30.4 million US. In theory, such a slight loss for a startup is unsurprising. After all, the firm invests its profits in further expansion. The cost item of $185 million US spent on technology and growth demonstrates this. However, in 2020, the turnover more than doubled, which persuaded me during my research. Coinbase had a revenue of $1.28 billion at the end of the year. At the same time, research and production costs climbed to $271.7 million. As a result, Coinbase is spending even more money in the development of its business model. However, a net profit of $322 million US remained at the end of the day. If we add in the 2.8 million monthly users reported by Coinbase in Q4 of 2020, we get a turnover of around $450 per user per year, or $38 per month. A turnover of $38 US per capita may not appear to be particularly high at first glance, but when compared to companies like Netflix, which have a disproportionately higher turnover but, when calculated based on turnover per user, end up with only $10.26 US per month, it becomes clear. Furthermore, the Coinbase stock impresses with a high profit margin of around 25%, which is expected to rise in the future due to economies of scale. In the long run, I estimate that this would be higher than 30%. Coinbase, in general, appeals to me as an exciting investment because it serves as a crypto business infrastructure provider. Investors must use a platform like Coinbase to trade cryptocurrencies. Coinbase's rapid growth demonstrates that this is frequently the case. What is a realistic valuation for the Coinbase share? Coinbase is not only a fast-growing company, but it also has a strong track record of profitability. Coinbase, in my opinion, will trade with a high earnings multiple of more than 200. The company was recently valued at $67.6 billion. Other analysts believe that a market capitalization of over $100 billion is possible. Based on the numbers, I believe Coinbase is a fascinating company. The share price, on the other hand, is likely to be decisive, because the expected return on Coinbase for the next few years must also be positive. Other well-known blockchain stocks, such as PayPal and Square, could serve as a guide to a reasonable price. In 2020, PayPal, for example, will have a P/E ratio of 65.4, while Square will have a P/E ratio of 453. The price per share will be $263 with a market capitalization of $67 billion and 254 million outstanding shares. The price would be $393 if the market capitalization was $100 billion. Coinbase share valuation based on the PEG ratio. The PEG ratio is an alternative approach to valuation that I prefer to use for growth companies. Essentially, this aligns the P/E ratio with the projected growth rate. The PEG ratio for Coinbase is predicted to be in the range of 207 to 310. Coinbase grew by more than 100% in the previous financial year. With the growing acceptance of cryptocurrencies, Tesla is reported to have recently invested in BTC through Coinbase. Growth is expected to accelerate even further. As a result, I believe a value of 200% is reasonable in this case. When measured in terms of growth, the PEG ratio is between 1.035 and 1.55. According to the expert literature, a PEG ratio greater than 1 indicates overvaluation. Coinbase, on the other hand, is a rapidly rising business, so values below 2 are also appealing. Discounted cash flow model for Coinbase valuation. In the sense of a share valuation, I also use the discounted cash flow (DCF) form. In the case of Coinbase, however, I have made an explicit decision against it. The explanation for this is that Coinbase continues to expand rapidly. In theory, the DCF approach is a good way to see if an existing organization is still on track to meet its growth goals. Personally, I prefer to work with annual return goals of at least 12%. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.